Financing Frontline Resilience with TFFF. The Transforming Frontline Fund, TFFF, has launched with a clear mission to channel urgently needed adaptation finance directly to the communities most at risk from climate change. With intensifying climate impacts disproportionately affecting the Global South, the fund aims to accelerate resilience building where traditional financing has fallen short. The Global South is a broad term used to describe low and middle income countries, primarily located in Latin America, Africa, Asia, and Oceania, that share histories of colonialism, structural inequalities, and current development challenges. It contrasts with the Global North, which generally refers to wealthier, industrialized nations in North America, Europe, and parts of East Asia, like Japan and South Korea. According to the UN Environment Program, the adaptation finance gap is widening, with developing countries requiring up to $387 billion annually by 2030 to address escalating climate risks. Yet current global flows remain less than a quarter of that need. The TFFF is designed to help bridge this gap by prioritizing frontline communities, ensuring they have both the resources and decision-making power to drive resilience. Direct support to communities. At its core, the TFFF strategy is built on shifting climate finance closer to the ground. By directing resources to local organizations and community-driven projects, the fund aims to counter the inefficiencies of top-down approaches that often fail to meet local needs. This approach aligns with growing calls across the climate policy landscape for more locally led adaptation. In 2021, more than 70 governments and organizations endorsed the Principles for Locally Led Adaptation, a framework urging that finance must be accessible, predictable, and flexible for vulnerable communities. TFFF's model seeks to operationalize these principles at scale, scaling resilience through innovative finance. Beyond direct disbursement, TFFF intends to leverage innovative financial mechanisms to expand its reach. By pooling donor contributions, blending public and private capital, and de-risking community-level investments, the fund aims to attract a broader coalition of financiers, from philanthropies to institutional investors. This reflects a broader trend in climate finance, where blended finance has grown from $60 billion in 2019 to more than $160 billion in 2023, according to the OECD. While still modest compared to global adaptation needs, these structures are increasingly viewed as essential for mobilizing private capital toward resilience efforts. For businesses and investors, this opens opportunities to align portfolios with climate resilience while advancing social equity. Companies facing supply chain risks from floods, droughts, and extreme weather stand to benefit from investments that strengthen the very communities they depend on. Why it matters for the Global South. The urgency of TFFF's mission is underscored by the disproportionate impacts of climate change in low and middle-income countries. The Intergovernmental Panel on Climate Change, IPCC, estimates that developing countries will require a median $295 billion per year in adaptation investments by 2050, with costs potentially ranging from $47 billion to more than $1 trillion annually. In practical terms, this translates into rising costs for businesses, governments, and aid systems, disrupted agriculture, forced migration, public health crises, and infrastructure losses. By channeling finance to adaptation before disasters escalate, TFFF is positioning itself as both a humanitarian and economic imperative. The bigger picture, filling the adaptation finance gap. TFFF is entering a landscape where traditional climate funds have faced challenges. The Green Climate Fund, GCF, despite being the largest multilateral climate finance mechanism, has been criticized for slow disbursements and complex approval processes. The Adaptation Fund, while impactful, remains limited in scale. TFFF differentiates itself by focusing narrowly on speed, accessibility, and scalability. Its design emphasizes simplified funding channels and capacity building so that local actors can not only access resources but also sustain projects. If successful, the fund could provide a model for future adaptation initiatives, reshaping how resilience finance is delivered across the Global South. Implications for business and policy leaders. For corporate sustainability leaders, TFFF represents an emerging platform to align climate strategies with community resilience. Engagement could range from direct contributions to co-financing models that mitigate risks along global supply chains. For policymakers, the fund reinforces the urgency of scaling adaptation finance to meet commitments under the Paris Agreement. With the next global stocktake approaching, the spotlight on how adaptation finance is tracked, delivered, and measured will only intensify. Looking ahead, as climate impacts intensify, the need to deliver finance directly to frontline communities has never been clearer. TFFF's model, grounded in local leadership, innovative financing, and global collaboration, offers a path forward at a moment when adaptation is increasingly seen as inseparable from sustainable development. Whether the fund can secure the scale of resources required to meet its ambitions remains to be seen. But its core message is unequivocal. Resilience must be built from the ground up. You've been listening to Sustainability Soundbites from E+E Leader. Are you in the market for expanding your company's reach? Contact us today to learn more about custom sponsorship opportunities available for your industry.